From global all-time highs to risk assets hitting new fresh highs on the verge of even higher prices, commodity prices increasing, real estate prices increasing, the longest yield curve inversions in history now uninverting, and countries in recession hitting fresh all-time high prices. The markets and investors are making an absolute joke, an absolute mockery out of traditional markers that suggest the market should have collapsed by this point. In today's video, I've got a plethora of data points to get through with you, along with reflecting on where Bitcoin's at, looking at the price analysis for BTC, for Ethereum, for the massive one over the last 24 hours, the big one, the XRP army, Solana, and of course, SUI. But we've got a little bit of data to get through before that with your macro cycle update here on the channel with me, Jason Pizzino. We're looking at Bitcoin, cryptos, the stock markets, and of course, the real estate cycle. Make sure you smash the like button right now and subscribe if you haven't already. If you've seen a few of the videos pop up on your newsfeed, you can always unsubscribe at a later date. Just check it out. There is plenty of data that we get through on a daily basis, and I don't want you missing out on each of the day's analysis. Too much goes by in 24 hours. Like we're seeing here with a few quick news headlines. Donald Trump to issue crypto executive order on day one back in office. So this, of course, is seeming like the good news, pumping up the markets. It's looking like the crypto markets are really beginning to go a little crazy here. But is it enough to get us through to those fresh highs? I'll get to that in the price analysis for BTC. Another day goes by and the market sentiment for crypto has hit greed yet again. So 2 days in a row there. So another piece here with Bitcoin, Italy's largest bank buys 1 million worth of Bitcoin as Texas, Oklahoma join list of US states pondering Bitcoin reserve. Now it's only $1 million and it's pretty funny to see that it's just 11 Bitcoin for one of the biggest banks that are buying it. But as you could probably tell from my name here, Pizzino, it is Italian, so that piqued my interest to see that at least one of the Italian banks is buying a few bucks worth of BTC. Okay, so now into the traditional finance here. Just a few data points before we continue on with the Bitcoin and crypto analysis. S&P sectors meet yield curve uninversion. As I said in the intro, this is one of, or if not the longest inversions in history, 26 months. There it is right at the bottom. One of the largest ones prior to that was in 1980. There was 21 months inverted, and that was at a mid-cycle slowdown point. If I can find my charts here, that was right through the middle here. You can see 1981 in the mid-cycle slowdown. Market took some time. It got into a low in 1982, and then it skyrocketed into 1987, huge dip, but then continued higher into the peak of the real estate cycle and economic cycle, that is, in 1989. So yes, the real estate and economic cycle came into a peak around 1989, stock market around 1989, 1990, and then there was the recession. So that's what we're looking at going forward from this point, and just keeping an eye on how long these dates have been, because there is still the talk about recession coming. I mean, we saw it in 2022, we heard it in 23, we heard it in 2024. Nothing has happened from that point, and of course we're going to hear it in 2025. But I'm going to present you with something that might make you think otherwise, that it doesn't even matter if there is a recession. All right, but first let's have a look at this one here, because this is looking at the financials, the financial sector of the S&P 500, which makes up a big part in the second half of the real estate cycle. Banks making more profits, probably off the back of a lot of mortgages. And of course, those interest rates are quite high. This typically shows that there is going to be further upside over, you got this period here, 3 months, 6 months, 12 months, and the percentages are 80%, 75%, and 70% higher over that period when this signal shows up. So this is a chart of the financial sector, S&P 500, taking a look at our 50% levels to see whether it's getting back into the strong half. Definitely has at this stage. And 1, 2, 3 days up. So higher highs, higher lows. Not looking at the color here, but just the higher highs, higher lows. Looking like a relatively strong period here. Doesn't mean that it can't pull back, fill in some of these gaps that have formed over this pretty big pump up. But at least there's a potential base forming here. And as the data suggests, 75-ish% of the time, you're likely going to see higher prices, which will then lead to further higher prices for the S&P 500, which of course is also made up of the financials. But in the short term, back to the daily here, it's had another rejection off the diagonal downtrend here. So we threw this in yesterday when we only had the early days worth of data. It's come up again, hit it, crossed back under the 50% level. So at the moment for January, Q1, still seems like things are a little bit up in the air. Obviously, there's the Trump inauguration next week. You're finally going to get your new president again. And the market has essentially run up for the last few days into that. So we need to now wait to see what it's going to digest to, because it's still in a trading range. You got the lows here at 5,800. You got the highs there at around 6,100 points. And at the moment, there isn't necessarily a clear trend to the upside. You've got an undecided trend in the daily here. And on the weekly, it's actually a downtrend. So you can see here on the reds, and if we throw it on the weekly chart, you got lower highs and lower lows. But the good news here is that you've got a lot of overlapping bars. So there's still a lot of buying and selling going on within that same price range, as opposed to it just dumping straight out of bed and no buyers there to be stepping in. So plenty of support to the downside, 5,700, 5,600, should anything happen into that inauguration or after that inauguration. It's still in a macro bull market. It's still in a long-term uptrend. The price that I would see a failure for the long-term uptrend is still at 5,100 points. For the NASDAQ, slightly weaker here. The downtrend is still there. You can still see the lower highs, lower lows, got rejected dead at your 50% level, within a few ticks of that 50% level. So really important to have those levels on your chart. To the downside, you still got the lows in there at basically 19,900. So really nothing to be concerned about, in my opinion, in my analysis, if we were to see further downside here, leading into those big news events of next week. Dow Jones, again, check it out, 2 days in a row, almost dead on the 50% level. It was a few ticks away on Wednesday, and then yesterday's daily action was 1 point above it and then got rejected. Now, it can go higher than this, but you can see the benefit of this 50% level, just to show you where the strength and the weakness is lying, at least in the short term. And then for the longer term views, well, you throw on your longer term ranges. And at the moment, the longer term range still comes in at 41,800 points. The crossing, or the low support level for a change in trend there, for the macro change in trend, is still at 38,000, 38,500 points. So it's all still on track, even if there is a short-term pullback here. As we looked at with the financials, things are looking okay. And as I said in the intro as well, it might not even matter if there is a recession in the US. Now, it's been called for years. It's been called since the last recession, but I mean, if you fell for that, then you missed out on those huge gains to the upside. And some more headlines in the last 24 hours. Germany's economy, so the biggest economy in Europe, shrinks for a second year in a row. So they've had a negative 0.3 in 2023 and then negative 0.2 in 2024. Here are the points here, so you can see a little clearer. So negative GDP for a country, yet you're seeing all-time highs for Germany. So for the German stock market, that is a new all-time high printed yesterday and the day before that. So again, new all-time highs. And of course, on the channel, we've been covering this for months, where you're just seeing higher and higher prices. So if you're a long trader, a long-term investor, what do you got to do? Pretty simple. You buy and hold on for the trend as long as you possibly can. Now, of course, there are going to be times where you'll see these start to break down, like we've seen in the past in July or August, like you saw the breakdowns throughout late 2023. So it doesn't necessarily mean that it goes up in a straight line, but the overall trend has essentially been straight up. New all-time highs, 2 years, mind you, in a row for a recession for the entire country. You can go back and look at the data for yourself. It's absolutely wild. And the top 50 in Europe are on the verge of hitting a new fresh 25-year high, 24 in a few months, right? Call it 25-year high. And if it's able to get to 52.25, I believe just a little high here to get to those 2000 levels, those highs here, 55.25, then that would be a new all-time high for Europe on their stock markets. Yes, there's obviously been inflation, plenty of money printing leading to the inflation, But at the end of the day, where the hell else are you going to put your money? You either got to put it into real estate, into business, into the stock market. And if you're not getting those gains on the way up while there's inflation going on everywhere, which is basically the game that we've been stuck with from the governments, well, then you're even worse off. So yeah, you could blame it on any particular thing. There's more money in the system, more money printing, whatever you want to blame it on and get angry at. But at the end of the day, we still have to do something. Maybe change will come at some point. I don't know. Today's video is on investing and long-term analysis. So we'll stick to that. Here it is. That's all part of the winner's curse, which of course now you've seen on the channel for years upon years. If you do want to learn more about this and put it into your trading and investing, then of course, check out the Investor Accelerator. Links here in the top of the video description. Name, email address, subscribe to that, and you'll be on getting that free weekly report. Okay, so that takes us back to the commodities, also hitting fresh highs here. 10th highest daily close for gold. So that's the 10th highest daily close in history. Copper also up in the last 24 hours. So that's the commodities, the metals are hitting fresh highs, also showing some signs that the economy is not doing as bad as what we hear about. You could blame, well, Trump's in, and yes, we're getting a bit of a pump from that. Whatever you want to blame it on, but overall, you've seen this trend continue up for months upon months back from 2023 with, of course, some significant corrections. We're hitting our head now on the diagonal downtrend here for the third time, so we've got to watch out for any sort of corrections there. And also silver, if you're a silver holder, also another day with a fresh high over the last several weeks. And of course, energies. We had this one hit on Wednesday and a slight pullback here. So just looking to any sort of support levels back at 76 or into the mid 70s now. So energies have been up for quite a considerable amount of time, basically about 3-4 weeks from that point, which I think over the long term, 6 to 12 months, could continue to lead to that inflation. And of course, we're into that peak of the market where basically everything is going up. Okay, so over to cryptos, Bitcoin's looking at all of our price analysis from this point. Fear and greed is obviously still damn high at 75. The exchange volume is still damn low at 60 billion. We definitely want to start seeing it get higher again, sort of your 80 to 100 billion, breaking out of these previous tops that were sitting around 80 to 100 billion prior to that. So that was the March peak that we saw last year at $74,000. And then only when we broke to, past the 74 into the 80s, 90s, and of course the peak at 108,000, did the 7-day moving average exchange volume reach the $100 billion level, which is still below the previous old all-time highs. So we hit those $100 billion levels back in April and May of 2021, which was the $65,000 top for BTC, and then price dropped off. So price corrected on all Bitcoin and cryptos, and then we went into a higher high for the price on BTC. Alts went a little bit crazy, but the exchange volume was down. So that was giving some signals that the run was potentially going to be over. Of course, I'm not Nostradamus, I'm not be able to call the exact top from that point, but typically at those highs, over the days, weeks, sometimes even a couple of months, you start to see a lot of the signs that suggest that the interest is definitely dropping off, and it's probably time to take some of those profits off the table. So I'm not saying that this is the end here. I still think we've got further upside, especially if we're able to hold this low that's formed and above these particular lows around 30, 40, 50 billion dollars. Because you can see overall for this 2023, you've got a low here at pretty damn low at 10 billion, higher lows forming at 30 to 40 billion, and currently we're at 50 billion for the low. So if we keep getting these high lows, that just means we're seeing a sustained amount of interest even after the extreme pumps to the upside. Okay, so the USDT dominance has been an absolute banger for identifying tops and bottoms. That was a post I put up yesterday, just looking at 2 key levels. So if you're not following on X, go do that. Links in the video description. Reason for that is there are a lot of scams out there. I don't have an Instagram. I don't have a WhatsApp. I don't have a Telegram group. So if you look at it or at any of those, or people are messaging you, you're getting scammed out there. So don't fall for any of that crap. Back to the USDT dominance. We're at 4% right now. And this was basically where we were sitting yesterday. And at the moment, there's been a slight bounce here. Daily look here is a higher low on that diagonal downtrend. So short term, and then I'll go to the longer term. At the moment, could be on for a move to 4.2, but really there's not too much else to add here for the short term. Now I want to draw our attention to this magnificent, beautiful hopium chart. And it's not logarithmic, it is actually looking at this thing inverted. So let's just get that inverted. And if I take off all of this, so you can do this for yourself, you can get really, really hyped up on how far this market could go. Because we take a look at the entire USDT dominance here, does that chart look like it wants to break down? Or is it looking like it's just waiting to break out of those tops? So this was the diagonal. Have a look at that white line through here. And then there's also the horizontal. And it seems like it's just buying time here. Even if it is to fall to these levels, well, in terms of the dominance, rise, because it's an inverted chart. Remember, we've flipped the chart upside down. Rises to that sort of 5.5 to 4.8, somewhere in this zone. It can still put in a higher low from these levels and take a little bit more time to break out, maybe for a fourth time breakout of the 3.8, 3.7% level. And in that case, could send things absolutely skyrocketing. And that could hit somewhere around 2.4 to 2.5% on the USDT dominance, which would basically mean a whole lot of stablecoin flowing somewhere. Is it flowing back into fiat as profit, or is it flowing into Bitcoin and cryptos? I suspect it'll be flowing out into the markets to speculate or gamble on the next latest, greatest, whatever piece of crap coin we're looking at buying. That would have been a fantastic segue into XRP, but I've got to get into Bitcoin and ETH first, and the total cryptocurrency market cap. Hit the like button if you enjoy those segues. I know the XRP community might not, especially if they're married to their coins. We're only married to profits here. We're only married to profits here, just like our members. What another fantastic segue. XRP USDT closed long 717%. Did you make that on your XRP gains? 1,044%. So congrats to last fire show. This is all within the TIA community. You can go and check these results out for yourself. I'm not posting them. I didn't make those gains on XRP. The community did. So even if you don't like a project, you can still trade it and show that you're making money. You should be married to your profits, not to your projects. That's a good one. I'm going to use that. I'll put it on Twitter. 597%. Well done, Rich. Hitting your XRP gains, H-bar gains, and more XRP gains. So congrats to you guys. If you want to check that out, you've got trading results, you've got TIA reviews to go and have a look at what people are saying about TIA Premium, and of course anything here on the channel. Link in the top of the video description right there. Okay, enough of the shills. Let's go back to the charts here. Total crypto market cap, or the true altcoin market cap, 107 weeks from the low. That's where we currently sit. And just looking at the price cycle, not really too different. There's been a few pieces that haven't been exactly the same, but that's okay. Things can rhyme. They don't have to be exactly the same. This is 108 weeks. So this red arrow there, 108, and there's 107. So it did have a little pump up and another consolidation before another significant move. Can this happen again? Of course, anything can happen again. I'd rather just continue to watch and wait to see any of those sort of breakouts, because from that point, over those next few weeks, that would really lead to a very significant move to the upside if the true altcoin market cap was to repeat like the last cycle there. So you can see where we currently sit. If that were to repeat over the coming weeks, you've got week 108, 9, 10, 11, and on the 12th one, that's when you had that significant breakout of this double top. 112 weeks would take you out to roughly mid-February for a significant push past the previous tops here at about $950 to $1 trillion on the true altcoin market cap. To the downside, everything is still looking relatively strong. It's above the short-term 50% at $800 billion. Here I am on my weekly chart. It's above the lows here at around $640 billion. So that's the previous lower monthly swing top, which is a very important point, and also above the previous tops there in March, April. So it's still respecting those levels, and of course way down here is 560 billion. So really the key level to the downside at this stage is you need to see it hold above about 640 to 660 billion dollars, and so far it's respecting all of that. So the true altcoin market is still looking relatively strong, even if there are significant corrections happening. As for Bitcoin, we've had 3 days to the upside, just like there were 3 days from a somewhat significant low. As I said at the time, I wouldn't necessarily consider this an absolute significant low just with where it sits in the overall picture. There's a lot of swings going on here, whereas from this top, there's basically no other swings going on because it was an all-time high. Therefore, it is more significant. However, we now have this low, and the significance of this is that it has broken down from all these lows and then closed higher. So there's some buying action going on, and we saw that over those last 3 days. So the 3-day rule from a low. Now, I wouldn't necessarily say it's more important than the top one yet because, well, that one there's from an all-time high. So there's nothing else that, no other significance above that because it is the all-time high. Whereas from this low, well, you got another low here as well. Now, the thing to use here, like we saw from May. So if you want to use this as some sort of buy the dip opportunity, if it was to present itself, as I've said before, I'm very bullish on basically everything going on. But if there were some sort of correction, which we typically see, well, then you can watch how much further it goes below those particular lows, just like last time. So let's throw on some of the lines here and have a look at how you can use this. So there's been a bit of discussion about the usefulness of the 3-day rule. Here, it stops you from being an absolute idiot and losing a ton of money. And then potentially from the lows, it can help you identify where a nice base is to, I guess, buy the dip, if you will. Only for certain things. You do you, right? But I'm looking at it here. This is the May dump. So that was a significant dump. And then you had an inside. So there's a gray dot, green, green, green. So if you're wondering what this is, TIA GameSwing Pro. As always, links are in the video description here. 7-day free trial. Check out the TIA indicator suite and add it to your chart. So what I'm doing here is just looking at, there's the strength, there's the signal, and how long was the market above that level. You can see that it took 64 days until it broke down. So that was a 2-month pattern above that particular signal, which is a very long time considering what had previously happened. At the time, you could look at anything underneath that low as potentially being a very good buying opportunity. So you can see underneath 56K, fantastic. Underneath 56K, underneath 56K, underneath 56K. So underneath that first signal. That is how I would look to use this, which is why I was even posting on X at the time. I was looking at prices under 60K is a nice round number, probably going to be very good buying opportunities moving forward. So this was about a 7% drop. This was about a 13% drop underneath the signal. That less than 1%, and this probably about 5 or 6%, right? So what if the market does come down underneath this 3-day rule? Well, then I'll be looking to 5 to 15% below that level. And I'd say anything underneath 89K is probably going to be good buying opportunities long term. That's only if it gets there. Maybe we only go into a higher low and we continue to consolidate and then push higher. No one knows for sure. But one thing we do know for sure is that we have not broken out of 102 yet. 102, 103, which is this top. So there's some short-term strength here, being above $99,000, $100,000, but it still has not broken above 102, 103. And we've got to see whether the thirst in crypto is enough to push us through and hold above that level and then continue higher. So more on that next week. Let's continue on with ETH and the XRP community. ETH here, day up, day down, still above the 50%, still above $3,200, but not as strong a position as what Bitcoin is. And just to save you any further time here, we need breakouts above 35 and 37, and still anything underneath 31 probably going to be pretty weak for ETH, and it would look to retest the low here at 29 and potentially 27. Solana, similar sort of thing, except slightly stronger. You can see it's closer to that previous top here in January, whereas for Ethereum, still a little way off from that point. Again, closes above 220 bucks, relatively strong. It's going to be in the strong half, going to be above those previous swing tops. Failure here, probably come back to retest around $190. Overall, you're in a trading range. What can you say? There is no definite signal of either breakout or breakdown yet, and that's essentially trading for you. SUI, I think it's an important one just to keep following up here because of the pattern that we've been tracking from the last peak that led to 4-ish months to the downside. There's still closes underneath that previous top, and in the short term, still closes above the 50% at $4.65. So although this might be forming a lower swing top, still no breakdown yet at the 50%, still no breakdown of the swing bottom, and still no breakdown of $4, which is the next very significant level. So I would say if we start to see closes underneath $4, retests and failures underneath 4, probably much more likely that you're going to see downside. However, while it's still in this zone between $4 and $5.30, it could just be consolidating for another move to the upside. And finally, we make it to XRP. Well, I'll start with the US dollar chart first. As you can see, $3.40, new fresh highs. XRP community celebrates the big gains here, and $3.55 is pretty much those peaks back in 2018, in January 2018. This one I remember very specifically. At the $3.50, I remember going to the gym, people were talking about XRP, a lot of people buying it at $3 and $3.50, hoping for $10, hoping for $20. That brings back memories. I had bought it back down here at 3 cents, sold it at 30 cents. I missed out on the 100x. I got the 10, I didn't get the 100. So I didn't get the 100x, but I got some gains. So hopefully you guys are making some gains for this. Maybe people want to keep holding on for longer to the upside. And this is why I want to bring up the XRP BTC chart. Now, of course, hold on to it as much as you want, do whatever the hell it is you want to do. As I showed earlier, even if you don't like the project, you can still make money from it. Maybe members do like the project and that's why they're making gains off it and they continue to trade it. 100%, 600%, 1000%, 700%. These are all XRP trades. You can go back and check all of this out for yourself, but you're interested in timeframes now. Yeah, in terms of averages to the upside, the average upswing bars, 3.8 weeks. So I'm on the weekly chart here and I'm looking at two bar swings. There are maximums to the upside, 24 weeks. Where do we see that? We saw that back in 2014, almost into 2015 here. That was 24 weeks in a row. However, the monster move happened over these 5 weeks. 1, 2, 3, 4, 5. So you're holding for this period. 5 weeks had the real big move. And when you break that down into a percentage, 5 weeks out of the roughly, call it 25 for easy numbers, 20% of the time the market was moving really strong where it gets the attention. And the other 20 weeks, it was grinding. It was grinding between those lower prices. This is against Bitcoin, of course. So you always want to be making the biggest gains against BTC. So if I'm just looking at the pure statistics here, there is an average of 4 weeks in any sort of trend to the upside. The median is roughly, well, it's 2. The maximum it's done is 24. And how many other times have we seen it go above a double digit? You have 11 into the final peak back in May of 2017. And that's the peak against Bitcoin. And then, of course, this is the period where it went up to $3. So you had 4 weeks. Going back to this one, 24 weeks. And then everything else you can see is pretty much single digits to the upside. 8 weeks, 9 weeks, typically is the longest here. So at the moment, it's at 3 weeks, had a pullback for 4 and up for 2. The total period here is now 9 weeks. So you're kind of getting to that pointy end. Doesn't mean sell right now. You need to have a signal to sell, right? You want to be getting out. Otherwise, you can be selling on all of the hype. There's a lot of hype at the moment. The news with the SEC and the XRP appeal, or the SEC appeal against XRP, and then XRP is reappealing the appeal so that they at least have some sort of defense there. You've obviously got Trump coming in next week. You've got talks with XRP and Trump. So basically, you're hearing a lot of information, or as we might call it, noise, like a lot of talk going on about XRP, which could be this pump here. Doesn't mean I'm saying it's going to crash. I'm just saying ride the trends like members are doing, making you hundreds of percent, if not 1,000%, which is absolutely incredible. And in terms of the longer term, there is still potentially a lot further to go for this particular cycle. So it's really dependent upon your plan here. Do you want to keep holding? Do you want to take a little bit of profits? As we've pointed out before, XRP does go on these sort of runs for 1 year. Look, 52 weeks from the low to the peak. This is against the US dollar. 57 weeks from the low to the peak. Again, from the low to the peak. No matter whether it was the SEC drama back here in 2020, 2021, or if it was like a move from June into the top in 2023, it's still 56 weeks. And now it's only about 27 weeks. So it's about halfway, 28 weeks, halfway into this potential move. And I'm literally just measuring all of XRP's previous history. And generally it looks like a 1 year move to the upside and then a big correction. So Short term, you're halfway, could be a bit of a breather point, and then another move to the upside. That's why it's dependent upon what your plan is from this point with your XRP holdings. Like and subscribe. I'll be back with you for another update. Amazing how we're seeing very high prices here. So I'm not bearish on the overall economy, overall markets. I just like to take a bit of profits because I do play a little bit of a conservative game here for the longer term. You do you, and I'll see you back at the next one. Cheers, guys.